Good morning, traders. This is Chris Buss with your Daily Profit Compass for Wednesday, September 30th. Okay, we had the presidential debates last night, and what followed was a busy night in the futures market. They were off pretty sharply when I hit the desk this morning. Most of the averages were off over 1%. They've since come well off of those lows. When I last looked, futures were down about 0.4% on NASDAQ and SPY futures, along with small caps. Silver was off 2% when I looked, and gold was off about 0.75%. So that's kind of how we stand here at 7:20 in the morning. We'll see how the rest of the pre-market plays out between now and 9:30, and then we'll take it from there. I want to start out with a different chart this morning than I usually do, and then we'll get into the indexes and FATMAAN names and a few other things I want to show you. This is my what I call the extremometer. It measures the ratio between the puts and the calls, and what it shows here, I've got certain levels marked. When you get a histogram bar above the red line, that's indicative of excessive call buying. When you get bars below the lime green line, it's indicative of excessive put buying. And you can see, like here in March, I mean, everybody piled in to puts, and you know, there was this put buying cluster, and that set the stage for the big rebound. And if you go back in history, this chart is very good at picking bottoms. It nails these extreme put buying moves, and that is also, you know, obviously that's a great signal to go long when everybody's piling in the shorts. The chart is not as good in picking tops because we're just coming off of a huge period of call buying, and we're still going up. So I mean, that doesn't, the extreme call buying is not as good a signal as put buying in terms of positioning for the next move. But we can see here that even after this decline, there's been no fear at all. The only thing that happened is puts and calls came back into the normal range, and we've had a couple periods of excessive call buying, which have started up again. And this is one of the most, I don't want to say frustrating, but something that's sticking in my mind, that with absolutely no fear in the market, and people buying calls like they're going out of style, is the market simply going to let all those people win? And that's what I wrestle with, about, you know, piling into calls with the crowd when, you know, you're just trying to get into that FOMO mode. And I don't know if that's the right position to be in, honestly. So I'm more neutral right now in my overall thinking. And what I want to show you is how that translates into my thinking in terms of positioning and trading. Last night I had a mentorship meeting last night, and after our regular session, we just kind of went into chat mode, and we were talking about the debates and blah blah blah, and then we were talking about, you know, what levels would get you bullish and what levels would get you bearish. And I tossed out a couple of levels just from memory, and the guys wanted to dig in a little bit more about how I formulate a trade plan around levels. So what I want to do is show you how that plays out for me on a daily basis. and starting with the SPY 2 hour. And this works with any time frame, so don't get wrapped up in, well, I don't trade the 2 hour. I trade, the daily chart, or I trade the 30-minute chart. The methodology is exactly the same. And it turns out the levels, if you're trading SPY, the levels are exactly the same. It's just that there wouldn't be as many, little intermediate stops on a daily chart as there would be on a 2 hour chart. So let's look at it. We had the drop. We set in an intermediate low here at 330. Are you with me? So that, we hit that firmly twice. We came down, we bounced, we hit that 330 level, we came up to 341.50, which was rejected, back to 330. This in and of itself is a trading range with resistance at 341.50 because it was hit 3 times and firmly rejected, and 330 is support. What happened next? Support broke. We came down to 322 and bounced. What was once support is now resistance. So 330 was support on this bar, but once it broke, now 330 is resistance. So we go up, we get rejected, we come back down to 322, and we had a little bit of an overshoot there, reached down to 320, and then bounce back up. So we go back up, price gaps above that resistance level at 330, which now makes that support. We go up here. This 336 level was where price was rejected before, creating resistance, and it was rejected yesterday. And now in the pre-market, we are somewhere in this gap. So, how I view this is between 341.50 and 322 is the chop. That is it's a $20 wide chop range where the bulls and the bears are going hand-to-hand combat with alternating control. Bulls are in control, bears are in control, bullish day, bearish day, bullish day. Maybe we'll have another bullish day and we'll go up here. But that's all tactical trading. Strategic trading is going to happen when the bulls either break above 342 or the bears break below 322. So here's a $20 wide trading range. A break above implies a $20 move. So a break above 342 says we're going back to the old highs. Remember, the width of the trading range is what you'd expect on either a breakout or a breakdown. So if price were to, I'm going to move this down so you can see it a little bit better. So if price were to come down here and break 322, the measured move would be 302. Back down towards the 200 and maybe a little bit below. So strategically bullish and long above 342, strategically short below 322. and in between is all support and resistance. If price were to move up here today at 341.50 and it looks to be stalling, that's an objective place to put on a short. And if it pops above and takes out your stop, you get a paper cut. And furthermore, you can say, hey, it's popped into a new range. I need to immediately get bullish and shoot against 341 and look for new highs, or look for a retest of the prior high up here at, towards 360. If it gets rejected here, then we come back down towards the bottom of the box. Just like right here, last night and yesterday, this 336 appears to be rejected. We have a gap opening that has yet to be filled. So if today price comes down to 330 or 329.50, you would cover your short, because you want to be short for the gap fill, if you follow me, and you would expect price to hold here. And if it doesn't, if 330 breaks, if the gap fills and then price breaks, you can be short, because the next target is 322. And if price were coming into 322 and you were short, that would be the place for you to cover. And you'd be capturing, that $6, which is an awesome trade. And then at that point, you can either flip long, buy support, flip long, looking for a bounce to stay within the range, or if you think it's going to break, you can wait, see if 322 breaks, and then you can get short. And that can be more of a duration short, because of the very nature of this support level. It's key support. It's not an intermediate level like these two. This is at the low side of the range. So if that were to break, you'd expect a lot more sellers to come in to push it down. So that's how I think of this range, as trading the bullish and bearish volatility within the range. But for longer term, I'm looking at 341.50 and 322 as strategic levels to be either long or short on my positions. So I hope that made sense. Let's move ahead to the 30-minute chart. Here we're just looking at the same ranges, except with more granularity. Price has been in a $3 range. If it breaks below 332, you're looking for a $3 move, and it's no coincidence that it's a $3 gap. So you would be looking for this gap to fill, and if it broke below the gap, you'd want to be short, and then you'd be looking for either 327 or all the way down to 322. And same thing on the upside. If this level holds and we move up here, on a break above 335, you'd be looking for 338 and then 341. So the levels are very well defined, and you've got price in this range. Now we'll have to see where it opens this morning, because then of course if there's a gap down, then there's going to be another, we'll have gaps both above and below price. So it would be very difficult to, guess which way it's going to go first, whether higher to fill the gap above or lower to fill the gap below. So that would be a hard trade to take right out of the gate. You will just have to see where it opens. Moving on to the Qs. Let me go through it again, the methodology. And what I said last night to the group, I definitely want to be long on a breakout above 280. We have a $12, at least a $12 trading range right here, and really it's a $20 range from 280 down to 260. If we break above 280, we're going back to 300. We're going to go back. I mean, this is really nothing here at 292. Not a lot of resistance there. I think if we break above 280 and hold it, we're going to back test the prior highs. If we break below 260, no coincidence, $20 lower is 240, which is the 200. And it's really uncanny how these levels tend to work out. I mean, you know, a $20 measured move from 260 is 240, which is the 200. That makes sense from a technical standpoint. So, in between 280 and 260, I'm staying very tactical. It's all chop and vol. There's no direction in here. And yes, you can make some money, you know, if you're long some stock and you catch, you know, this upswing, you know, that's fine if that's how you want to trade it. Or you can just trade these levels like we talked about in SPY. For me, like say today, 268 is an important number. Yesterday's high at 277 is an important number. If we were to break below 268, I would want to be short for a run to 260. If it holds, probably going to, you know, try to come back to 275 or 277 or even 278 to test the other side of the box. This is the zone where the bulls and the bears are going hand to hand. They can't decide who is really in control. They've been alternating control for a couple of weeks. But whenever that resolves, we can be strategically long or strategically short. And in the meantime, we can have an absolute field day with the intraday stuff. And if that's not your bag, you know, I respect that. That's fine. You can trade that or not trade it, you know, whatever your style is. But these are the well-defined levels that you could, if you wanted to, trade against. And that's the mode I get in when I see chop. Over here it's different. If you're in a, you know, in a strong uptrend and the bulls are in control, you can sit in long positions for, you know, weeks at a time and, you know, do fine. But here you just get chopped to pieces. 30-minute chart. We've got an open gap below, and we've got this $2 trading range from 277 to 275. Actually, it's down to 274. Apologies. $3 range between 274 and 277. If we break above, we test 280. If we break below, we test this 271, 272 area. And if we lose 268, we come down here to the bottom of the box. So those are your levels. Very well defined, very clear. IWM, was rejected yesterday at this $3 gap, came back, stalled again just below. So if we break above yesterday's high, you can get long for that $3 gap fill. And if we break below 148, you'd expect this gap to fill. And if the bottom of the gap fails, we're coming back down to this 144 area for another test. 30-minute chart just shows the same thing. It's not really apparent why price stopped there until you look left and see this higher volume over price bar. I could have easily, put a resistance level right above that, and that would align perfectly with these highs where it got stopped. So you can mark that on your chart. Let's see what it was. 150.28 right here. So if price were to break above that, you can use that level to shoot against. Or 149.50, if you want to give it a little bit more room, that's fine. And then here's your open gap below that you would either want to get out of your longs or get short for that $2 gap fill. Facebook couldn't be clearer. Above 263, which is this level right here, get long, because then you got to run up to, you got a $10 open run up to 273. That would be, if everything gets all bullish today, that would be a nice trade. Be very cautious if price rolls over and breaks this uptrend line off of the lows. Apple, you could draw this as a flag. Here's your impulsive move, then a tight trading range. If you see a break above 115, your target's 118. You can be long. If you see a breakdown below 113.5, probably going to come back in here. Maybe you've got a peak here at about 1150. And if that doesn't hold, then you're coming back to 110. So that's a very well-defined setup. It's one or the other is going to happen. I doubt you see this trading range extend throughout this whole day today, but at least you can alarm each level to take a trade if you're interested. Okay, Amazon, these $50 levels, we've been talking about it forever, work great. We're sitting here at 31.50. I think I saw in the pre-market we were down in this area with this little gap. So you've got this 3100 level that's well defined. Then you've got this 3200 level, and then I think 3150 is as good a pivot as any for today. Below 3150, I think you got to lean bearish as long as it holds, or if it recaptures from below, you can be bullish and look for 3200 or 3250. Now, I haven't mentioned it, but remember, today's the end of the month. And more importantly, today's the end of the quarter. So there may be a lot of forces out there, hedge funds in the market in general, that want to close the month strong for their books. And then they may come back in tomorrow and sell it all again. So end of quarter window dressing is real. It's, it happens. Doesn't mean it's going to happen. It just means it could happen. So even though it may look like we're soggy here in the morning in the pre-market, remember, those guys are the pajama traders. Nothing really matters until 9:31 when the institutions get on the field, where they have at least some liquidity to buy into or sell into. They're not going to be active in the pre-market. Those are all little guys, relatively speaking, of course. So don't get too wrapped up in seeing a red pre-market and assuming we're going to have a sell-off today. It doesn't necessarily work like that. Moving on to Microsoft. Found support in here at 207. Not great definition here, but I've got 208 marked as a pivot point, and I think that still works. Above 208, you've got 210 and 213. Below 208, you've got 204.50 and 202 on the downside. So I'd use that 208 as your pivot if you're going to actively trade that. Now, on a more strategic level, if I wanted to own Microsoft and I saw all of this chop here, and I got to move down to the prior low at 197. If you want to be long Microsoft, that's where you buy it, with a stop just below. Or you can buy the breakout. It may not come back down here again, and this may break out here at 213. You can buy 213, and then you can look for 222, and then you can look for a run up to 230 to back test the prior high. And if that's happening, I'm sure the Qs have already broken out above 280. So that would be a confirming, factor. I doubt you're going to see Microsoft just, bolt up and break out with everybody else stuck in the mud. So you'll see all this stuff start happening at the same time. Netflix, our levels have been working great. So here we are at 495, and you can tell been a lot of trades at 495 shown by this high volume over price bar. So above 495, be bullish, look for 505 and 520. If it gets rejected there, you're looking at 485, 475, and 465. So it's right at the pivot point. That's like a perfect location if you want to trade that actively today. You're right at the focal point. Google didn't do a whole lot yesterday, but it's right at this pivot point at 1465. Above, you can be bullish and look for 1490. If it gets rejected, coming back into 1430, possibly all the way back to 1410 if things turn south in the market and for the market leading FANG names. Tesla hasn't been doing much lately. I show that it still has a little bit of this gap to fill. Just use yesterday's high, 428.50 right here. If it breaks that, you can be long and look for 450. If it breaks below 410 here on this gap, then you can look for 390 and 380. It's been very resilient. I have not been active in the name, but if you have been, you know these levels and you can trade it as you like. But if things get bullish today, you can buy the break above yesterday's high, and then you can set your stop just below. That would be perfectly fine. I want to touch on gold. We had 2 days of dollar weakness following this period of time when there was dollar strength. So let's look at it. I told you gold was down like 0.75%, something like that. But price is coming back into resistance, because before this level, there was almost a touch here, a touch here, a touch here, spent some time here. So if price were to get back into 179, that's an objective place to try a short against that level, because now all this is resistance. If it rolls over here, I expect it to come back down and test this 174.50 area, and it may chop around, but I still think there's an underlying bid to the dollar because of the record short positioning that is sitting there. I just don't think the market is going to let all those guys just win forever. I think there's going to be a short squeeze, like I've been saying for a while. This was the start of it. Everything has kickback rallies. I didn't throw the fibs on this, but it looks like a 38% retracement just from the eyeball of it. And if it rolls down, you could draw a bear flag here. It's coming back to 170. But price has to prove it, right? So if you wanted to try a short today, kind of late, if it's already down at 1%. The time to do it was, of course, yesterday afternoon. But if in the future, like if the dollar gets weak today and this comes back, that's a good anchor point. Otherwise, you can, a break of this low would be your next entry point. I don't think you can enter in here. That's really like no man's land. So wait till you get an objective level to take a shot against. Silver, same thing. Kickback rally, back into resistance. Nice shorting location, but it's down 2% today. Now we've got this nice uptrend line on the daily. You know, if that were to break, you could make a case for, you know, I want to get short there and look for a move to 2050. I'm not going to do that. I'm going to wait. I think the grand prize is this $3 void if this were to break at 2050. So I'm going to wait for that. I have that alarmed in my system. And also, that might be it. That might not break this time. And, you know, it comes back down, puts in a double bottom, and goes. We got to be prepared for that scenario. But I do think it's coming back for another test. And then we'll have to collectively decide if we want to take a stab at a long or position for a breakdown of that level. We'll have to wait and see. That's, you know, later on this week or next week, whatever. Here's a new name I came across, MCRB. It's a small biotech. I don't know much about what they do. This is strictly from a chart pattern. You know, you got a massive gap up. They must have had a drug approved. All the people that were in it, you know, are taking profits and other people getting in. And now yesterday there was a breakout. I did look at the option chain. It's not the greatest in the whole wide world. I think if you wanted to do something here, you could use limit orders and just put in the price, you know, that you want to pay, and you either get filled or you don't. But from a technical analysis standpoint, this is a nice structure. You can see that momentum has burned off while the coil is building, and now you got a pending bull cross here that can take the next leg. And if we draw this as a massive flag, I mean, you can see what that extension would project to is, you know, way up there. So anyways, that's a name that you might want to put on the radar. And we talked about WYNN yesterday. WYNN was off 4% yesterday. It hit the 8 EMA and was off 4%. If you like WYNN, this is where you got to buy. You're at long-term support where it's held 5 or 6 times in the past. If you get long and it loses this level, immediately flip short, because if this doesn't hold this time, then all this becomes resistance once it breaks. But support is support until it's broken. You could have said that on all these other occasions, and support held and went higher. So you buy at support, you sell at resistance, and if price proves you wrong, you flip the other, you flip to the other side. And that brings me to my final point this morning. It's been a rather long video, but one of the things we were talking about last night was just that simple fact. Say you're in a trade and you're bullish, and price proves you wrong. It stops you out. A lot of traders would simply get frustrated at that point and be very disappointed that they lost. You know, that's fine. Okay, it didn't work. You lost some money. You got a paper cut. Think rationally and clearly if there is a bearish trade to be made with where price is. So what I'm a roundabout way of saying, don't give up on the trade. There may be an even more compelling trade to make going the other way after you got stopped out and lost a little bit of money on your long try. Maybe you can make 10 times that amount on the short side given where price is. And this is a perfect example of that. TA 101 says you got to buy here. You're at support. You're at a proven level. It's held all these times. That's where you're supposed to buy. But if it fails, that's when you're supposed to sell, because you only got 2 other places it can go once this breaks, and that's down here to 50 and a retag of the March lows. I'm not saying that's going to happen. All I'm saying is don't get frustrated and close the chart, because there may be even a better trade waiting around the corner based on what happened to your first trade. So don't get mad. Just recalibrate and see if there's another objective trade to make. Okay, long video this morning, guys. Just to quickly recap. End of month, end of quarter. There may be bullish forces out there. Don't assume anything. Trade level to level, and keep your stops, honor your stops, and you'll have a good day of trading. I'm pretty confident of that. So if you're new to the channel, I appreciate you subscribing. And if you like the content, please give me a thumbs up, leave me a comment, let me know how I can make these videos more compelling for you. Jump over to the show notes and you can register for my content, and there's links to the blog where you'll find a lot of helpful information for aspiring traders at all levels. So I really appreciate your time this morning. I hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.